Gentex might not be making headlines, but at Insightful Value, we've noticed something interesting. Its stock has been sliding, and it's starting to look like the market is overlooking some serious fundamentals. This video is for informational and educational purposes only, not financial advice. So what is Gentex? Based in Michigan, Gentex is a technology-driven supplier that dominates the market for auto-dimming rearview mirrors. But that's just the start. The company develops electronic vision systems, connected car features, and even fire protection products. They're embedded in the supply chains of top-tier automakers like GM, Toyota, and BMW. The product lineup includes rear-view and full-display mirrors, smart lighting systems, and in-cabin monitoring tech, integral parts of modern vehicles where safety and convenience intersect. From a value investing perspective, Gentex has the hallmarks of a steady compounder. It's consistently profitable, with gross margins around 35% and operating margins in the low 20s. For a manufacturer, those are impressive numbers. Revenue for the most recent fiscal year hit over $2.3 billion, and the company maintains a solid return on equity near 17%. They've also got virtually no long-term debt, which adds to the appeal in volatile market conditions. Despite this, Gentex stock has been drifting lower, with many investors possibly turned off by recent sluggishness in auto production or uncertainty around EV adoption. But this may be short-term noise. Gentex continues to innovate, recently introducing new products like biometric vehicle access and driver fatigue detection systems. These are technologies aligned with the future of mobility, and they're already in pilot programs with key OEMs. On the shareholder side, Gentex has been quietly rewarding investors with consistent dividends and share repurchase programs. The dividend yield sits around 1.6%, not huge, but sustainable and backed by strong cash flow. So why the low valuation? Part of it is macroeconomic. The auto sector as a whole has been under pressure. There's also some investor skepticism about how fast new tech will translate into revenue. And of course, competition in the auto tech space is fierce, with many startups and established giants eyeing the same pie. Risks here include reliance on cyclical automotive markets, tech disruption, and possible margin pressure if costs increase or customer concentration becomes a problem. But Gentex has weathered downturns before and maintained profitability through them. This looks less like a busted growth story and more like a temporary dislocation in valuation. At Insightful Value, we're all about uncovering these kinds of overlooked opportunities. We take deep dives into undervalued companies, break down the key numbers, and present everything in a clean, straightforward way. No jargon, no hype, just solid analysis. Whether you're just getting started in investing or have years of experience, our mission is to help you spot value where others don't. For more info on Gentex and other underrated stocks, visit insightfulvalue.com. And don't forget to subscribe to the channel because value isn't always obvious, but it's always out there waiting to be found.